Hey everyone, hope you're doing well. We're going to talk a little bit more about the ETFs just after some back and forth conversation with people on the comments from the previous video. Bitcoin, Ethereum, NEO, and ETP BTC. We're going to look at those names. And I'm all out of easy story time. I can certainly dig some up with some effort for the future, but for the next few days, we're just going to end with some animal videos from the farm. And that's going to keep things easy. I also have a friend visiting, so I'll put some more effort into story time and where we go from there in a few days. But for now, let's talk about the ETF again. So, made all the points for the ETF. One thing that people brought up, and there was less pushback than I thought there would be. I did have one person call me some very mean names, but people saying the scenario that I didn't mention is the dollar collapsing. So I'll give my opinion on that. And again, your opinion is going to vary. And this is the kind of speculation and opinion that we could argue about for 30 years and never get anywhere. So it's like talking about religion because it's a completely speculative event that we have no idea if it's even going to happen. So again, everybody's opinion on this is valid enough to not waste time arguing back and forth on it. But my opinion is, can the dollar collapse? Absolutely. We saw in 2008, the dollar took a huge hit. Let's look at that chart. We're all about charts here. So the dollar back in 2008, this is the weekly time frame. So you can see we dumped from 2002 with a price of 118 and all the way down to 71 in 2018. And this is using DXY, which compares it to a basket of currencies. So we dumped hard. There is no doubt about that. Did the dollar collapse? No, it dumped really hard. It hit lows, but it bounced back. Why did it bounce back? The Fed can print money out of thin air. And they printed, $15 trillion. I'm sure it was even more than that. And maybe 13 trillion, whatever. A lot of money. So the government is completely vested in the dollar. We have literally gone to war with other countries over the strength of our dollar and things that they were doing to potentially destabilize it. So in my opinion, the dollar and the government are linked hand in hand. If the dollar is going to collapse, the government's going to collapse. People foresee this as a potential setup for cryptocurrency emerging from the dust as being the go-to. In my opinion, if we reach a scenario where the dollar is collapsing and the government is collapsing, cryptocurrency is going to be the absolute last thing on my mind. I'm going to be worried about securing a fresh water source. I'm going to be worried about saving my seeds and growing my own food and protecting my land and wherever I'm living. That's what I'm going to be worried about if these things happen. I find it hard to believe that these people are imagining that the dollar is going to collapse and everybody's going to go about their lives and just whip out their phones and start using cryptocurrency. I can't ever foresee that happening. We're going to have, shipments of food are going to slow down while this all gets sorted out, and it's going to be chaos, in my opinion. So can cryptocurrency emerge from the chaos? Yes, absolutely. But it's the kind of thing where I don't want to put myself in a scenario where I'm hoping for that to happen. Because if that happens, we're literally talking about a lot of people dying. 30,000 people die for every 1% drop in employment. So if we're going to see a crash and we're going to see the government collapse, we're going to see a lot of people die. I don't want to have this, being prepared for it is one thing, but if I'm financially invested in that and I'm hoping for the day that that happens, that just doesn't sit well with me. Another thing is, it's never happened before. So can it happen? Yes, absolutely. I'm all about probabilities. That's how I base my trading style. What's the probability this is going to happen? It is less likely than likely for a number of reasons. Number one, it's never happened. Number two, if it does happen again, why can't the Fed just print another $15 trillion and bail everything out again? Granted, eventually at one point, that won't work anymore, just the way macroeconomics works. But who are we to say that they can't kick the can further down the road another 20 years just by doing it again? We don't know. So in my opinion, the odds of the dollar collapsing, leading to cryptocurrency surging and becoming the go-to use for currency is so minuscule that I would never in a million years place bets or position myself for that game plan. So I'm going to place bets and position myself for an ETF, which is way more likely percentage-wise in the near term. What if I'm sitting here waiting for 8 years for this dollar weakness? People have been waiting for 10 years. 2008 was the collapse. I went and stayed woofing, worldwide opportunity on organic farms. I stayed in California with a woman and she was a environmentalist extremist, and she was a doomsday prepper essentially, where She sold everything, all of her assets, her house in the town. She moved out on a hill in the middle of nowhere. She was buying guns. She was buying solar and batteries and paying to have a pond installed for fresh water. So she was going all in, and she structured her finances based on the assumption that the market was going to collapse in the near future. So she was all in gold. She was all in all these defensive sectors. Meanwhile, the market ripped for a decade in her face, and she lost a lot of money. So we cannot try and time the top. The markets can stay irrational way longer than you can stay solvent. And I'm not going to be sitting here looking for this once in a multiple generation event to bring home the bacon in terms of cryptocurrency moving to the forefront. It's just, is it possible? Yes, absolutely. Is it likely? No, not at all, in my opinion. Maybe 20 years, maybe 40 years. I'm not going to wait around for that to happen. I want the ETF to come along for more widespread adoption, and I want the projects to continue to grow fundamentally in blockchain. That's the other thing. Regulation on exchanges, regulation of futures, regulation of ETFs is all about trading instruments. It has nothing to do with the technology behind blockchain. Regulation of ETFs has nothing to do with regulation of blockchain and the potential of the growth and movement towards decentralized industries. So an example of that, again, I went to the conference and I've been following the trucking sector, the shipping sector. In my opinion, this industry is going to completely overhaul the industry by utilizing blockchain technology, increasing efficiencies, and the general public is going to see none of it. It's not going to be flashy. There's not going to be, a coin that goes crazy because of this adoption of this technology. It's going to be behind the scenes. It's going to affect the bottom line and the profit and the costs of these companies, and investors and people who read the financial statements are going to see the effect of it. But in terms of it, a coin running to 1 million, and it's because it's now being used in the shipping sector, in my opinion, that's not going to happen. So blockchain and the technology behind it is not directly related to currency, cryptocurrencies trading, and the regulation of this trading. So that's my opinion on the dollar and the future of the country. So let's go to Bitcoin and let's talk about where we stand, because we are still in the same standpoint for the past couple days. So here we are in the hourly time frame, and it's the same thing. Sideways trading, quintuple top of resistance. We rejected 5 times in a $15 range, and then we dumped to a lower low. Here we are. The top of the initial bounce is 6,207, and it's just lower highs. Lower high at 61.97, 61.93, likely a lower high wherever this ends up, and it's just straight across. Look at the RSI. It's cooling off the RSI levels, allowing for another leg down. The 4-hour RSI at this point is still oversold, but look at it cool off a little bit. This bounce has done nothing but go sideways, but the RSI has gone from 25 to 27. It's not cooled off a lot. If we do see another leg down, we'll be mid to lower 20s very quickly as we approach 6,000 psychological, but the bulls have not proven a thing. And if you go back on the hourly time frame, and this last gasp for the bulls before the momentum shifted, we rejected from 6,815, and then the bears took over. And ever since that one candlestick, there literally has not been one thing that has had me looking at the bulls. So this one candlestick with solid volume and solid bullish action was just a lower high on the hourly. We got no follow through, no breaks of resistance. So in this instance, the bears are loving it because there's no fake outs. It's a very clear bear pattern. It's lower highs and lower lows, and it's very easy to stay in those trades as long as that is the case. So at least bears will take this in terms of clarity and not this choppy, big upper wick, big lower wick, back and forth action. This shows conviction. There's conviction by the bears as the bulls rolled over. The bulls gave up. They said, all right, 5th attempt, we can't break it. We're rolling over, have at it, bears, and the bears are having at it. So the daily time frame, we're still looking for a higher low to form. It has not formed at this point, obviously. We're still down near the lows. So I'm looking at the low of the dump, the high of the bounce, and we're looking for a higher low compared to 5,790. I do expect that we will see a bounce perhaps after one more leg down for the daily chart to give us a bit of a bounce to form a lower high and form an equilibrium pattern, which I highlighted it as scenario 2 from a few videos ago on what to be looking for. So that's the most likely scenario still, in my opinion. Look at the volume. Look at the bull volume on the way up, and look at the bear volume on these dumps. It is notable that this bear volume is fairly high. Some of the bull volume on the initial move up matched it, but overall, compared to the last few green candlesticks, it's definitely notable bear volume. Bottom line, bears still in absolute full control of the short term. We are still looking at tightening daily ranges, but names like Ethereum and Litecoin and BCH are closer to breaking to lower lows on the daily than Bitcoin is. And if those names do break to lower lows, that's going to increase the percentage chance that Bitcoin falls as well. So looking at Ethereum on the daily, here's that low of 404.22, and here's that support level of this current low of 425.34. So we are currently about 5% above that low, and we look at where Bitcoin's at, and Bitcoin is currently about 0.67%. So not a big difference, but enough that it is notable. So we're right down at the support level right now. The bulls tried to bounce yesterday, 4-hour time frame, just fading. And again, a lot of these individual coins can make clear bull breaks compared to what Bitcoin is doing, but in terms of follow through, they don't have follow through. And it's because Bitcoin's holding them back. And we're going to look at NEO as an example of that in just a moment. But for Ethereum, 4-hour time frame has clear lower highs. Exponential resistance is dropping down. The hourly time frame has a double low, 426.66, 426.50, and just a clear weak pattern with a key resistance. I would say 434.97 is the clear resistance to be watching in the short term. Go back to Bitcoin. If the bulls show up on the hourly, let's say we break the lower highs, we zoom out and we look at the 4-hour chart and we watch the exponential resistance, which essentially rejected the last price before we dumped down to a new leg. So if we get a bull break, that's where we zoom out to, because the bulls still won't be proving a whole lot. They'll be showing us their first sign, but in terms of changing the 4-hour trend, that's not happening anytime soon. And if we drop down another leg, watch that 4-hour RSI, but I'm not comfortable buying oversold dips these days unless that 4-hour RSI is down at 20, essentially. So I've talked about different market cycles in a tweet earlier today. The different market cycles for Bitcoin, obviously the raging bull market was the first one, and I'm just talking about the last 14 months that I've been involved. So raging bull market, significant bear market, a lot of aggressive bears, but also a lot of aggressive buying of the dip. So that's when 4-hour oversold bounces were king, and I was making a ton of money with my oversold bounce plays because the bulls were there buying with me. It was very clear that there was a lot of support there. Then after we dropped down to a lower low, after the top in April, it's been a slow bear grind fade. And we don't have those bounces, and we don't have bulls looking to buy the dips aggressively. And that shows me a loss of hope to a certain degree. And that is the third market cycle. These wicks of upper and lower wicks and a lack of clarity trading in short-term ranges and just patiently waiting. Again, the bears obviously have consistency over the last few months, but there's been fake outs in both directions. It's just a bit of a choppy market. And the reason for that choppy market is the declining volume. So in my opinion, I'll call it a fourth market cycle when we get a break of this volume. It could be a spike in bear volume on a bear flag being confirmed on the weekly. It could be a spike in bull volume on our final break or our eventual break of 6,800. Don't know which direction it's going to be. The bears have favor for it to be in their direction, but I'm looking for a spike in volume as a bit of a jump start, a little shock to the market to potentially send it into a different market cycle with different patterns. Because every time we enter a different market cycle, different things work with technical analysis. In the raging bull market, 5-minute oversold conditions were golden. 15-minute oversold conditions were perfect entries. On the second market cycle, 4-hour oversold bounces were money. On the third market cycle, slow grind for the bears. And on the fourth market cycle, we'll have different signals and different indications to be using as technical analysis, but we have to make note of what they are and notice patterns. So that's where we stand on the overall market. NEO, so here's the example where NEO saw a huge bull move and it looked like, oh, we're breaking the downtrend and we're finally going to switch the momentum. And then it's just faded. And the reason it has just faded is because Bitcoin has just faded. And there is a correlation. While we can break correlations in the short term with individual coins seeing spikes of volume to break those correlations, they eventually sync back up. The volume wears off, the hype of the news or whatever the event is wears off, and the correlations get strong again. So here we are fading from our move of $48, and we have now given back, at this point, 17 of that 48. That's about a 35% pullback, and that is very notable. So if I were in this market shorting, which I'm currently not, and in hindsight, people always say, why are you not shorting? Number one, I don't trust exchanges with significant amounts of capital. And number two, I've been doing other things. With Canadian MJ, that's the most successful stock trading I've ever had is Canadian MJ in the last year. So I'm not missing out in terms of, just sitting on my hands. I'm doing other things. But if I were playing bearish in this market, I would look for coins that have news that get a surge up. And as long as Bitcoin is staying weak, I would then look to short those big bull moves because of the percentages to the downside. So that brings us to ETP BTC, which has seen a huge bull move. So here on the weekly time frame, the trend change was very clear, where we had our low of consolidation at 782, and then we held that support at 79. So it's essentially a double bottom, and then the first signal for the bulls is breaking the weekly lower highs. So here's the lower high where we had a bounce attempt, and then another bounce attempt, so clear lower high at 138, another lower high at 121, and then we broke those levels. Signal number 1 for the bulls is a break of 1218. Signal number 2 is a break of 13.8. So when did that happen on this breakout? It happened on this candlestick, July 5th, and then the second follow-through break occurred this candlestick, the 6th. And look at the follow-through. Huge follow-through for the bulls, 100% gains. We haven't seen that in a long time. That's a breath of fresh air for the bulls. But obviously you want to be aware of what the news is and the fundamentals reasons for this kind of move on any individual coin. But if the hype dies down on these coins, bears have a really easy time of things while we just have a slow fade. So if Bitcoin continues to see weakness, I would anticipate that ETP is likely to fade a bit as well. So it's a clear bearish reversal candlestick. Look at the volume climax, perfection, signaling the temporary top. 267 is resistance. And to look for support, we look at the hourly chart. We've clearly lost the uptrend. The shift in momentum was right here. We had the high, the low, lower high, and then just broke down to a lower low. The 4-hour chart, the last consolidation hasn't happened in a long time. So we're not going to change this 4-hour trend anytime soon because the last support is down at 183. So we can easily see a 4-hour low anywhere in this area and then a bounce and an equilibrium on the 4-hour time frame. That is the most likely scenario for me right now at this point. The hourly RSI not near oversold, so we could keep pulling back from here. And once we look for a 15-minute trend change and an hourly trend change in terms of a higher low and a higher high, that's when we'll be confident that our new 4-hour higher low has been established. And then from there, we will look for an equilibrium. So let's see if we get this tightening range once the support level is found, but support is not found until the hourly trend changes back with a higher low and a higher high in favor of the bulls. So the bears are in complete control of consolidation mode right now, but just being aware that the 4-hour time frame is still very healthy overall, I would be cautious going aggressively short. I'd like to see a 4-hour lower high equilibrium tightening range and a bear break of that before I were confident in another leg down. So congrats to the bulls that rode this one up. Significant gains to the upside, but have to be cautious now because that volume climax on the daily time frame, very convincing, and watching that 4-hour time frame for a higher low and a lower high to form into maybe not tomorrow, maybe into Saturday. I'll keep an eye on this and we'll cover it again in another video when we do get that tightening range forming. So that's where we stand overall. Bitcoin's still incredibly weak. Still watching for the ETF August 10th. Another thing I didn't mention in the last video is they can kick the can down the road and delay it by, I believe, 2 months. So it could be October if they do, but we're going to get a decision August 10th, whether it's a delay decision, a rejection, or an approval. That's what we're going to be looking for. And that's the game changer if we can get it to shift momentum instantly. Sentiment will instantly shift if we get that. So that's what the bulls are hoping for at this point. We can either hope for an ETF or we can hope for the dollar and the government to collapse. I'm going to put my money on the ETF for now. And I'll see you all tomorrow. Here's some pigs and some goats. Do good things.
Hey, Boom. Want some water? Yeah. I built you something. Yeah. Looking good, guys.